Hey, Landy, how you doing today?
I
You with
am
me?
doing well, Peace. It's great to see you. And today's a good day. Today's a good day. We've had a lot happen over the weekend. Um, and I guess I got to turn that back on you. How are you doing?
I'm not too bad. I feel good about the activity in the space, the Stacks ecosystem, the broader Bitcoin ecosystem. What's all the good stuff that's happening with crypto? I'm cautiously optimistic um, that the new administration is going to be an ally. But I do remain cautiously optimistic because I'm not sure that their agenda really aligns with the broader agenda necessarily. But I'm feeling good. Otherwise, we're definitely in a better situation than we were a month ago, 2 months ago, 6 months ago in crypto. So with the new administration, I think.
Yeah, I agree. Um, Look, I based on the executive orders that were signed and the questions that were being answered by the president yesterday, I think that he has hit the ground running in delivering on a lot of the promises that he's made to his base. And now it's about when does the crypto aspect come into play? And I think it's pretty important to understand that, especially after what we saw Friday into Saturday with the launch of the Trump token, that we have a good indication of what they want to do, especially with World Liberty Financial, what they want to do within the crypto industry in terms of Trump's businesses that his sons are handling, right? And I think that is likely going to lead to crypto being its own announcement, right? Like Bitcoin Reserve, crypto regulations. Those are all going to be, he wants the headlines, right? And if we were to see that all jumbled in with his inaugural address and all of the other things that he's delivering on for his base, yeah, he delivered a lot to the base yesterday. And whether people disagree or agree on the policies, he definitely did do exactly what he said he was going to do day one for his base. And I think that would have been, anything crypto related would have been buried by the media. I mean, they're already running with the narratives that they have picked out that they don't like, right? And I think that it
Well,
would be
you mean like Elon throwing out Nazi salutes?
well, look, that's you've seen the pictures floating around of Obama, Kamala, Biden, and the rest doing the same. Look at Asperger's is a real thing, and dude was excited. And for anyone to misconstrue that as an actual Nazi symbol, I think is a little silly. And maybe we disagree on that. I don't know where you stand on it, but I think it's a little
No, I think
hyperbolic.
it's exactly completely disingenuous that to represent it as a Nazi salute.
Y-
There was nothing in context. I
Yeah,
mean, the form was a little bit. The form was on. It made it easy to. It made it
yeah.
easy to run with. But but
I
I
mean, look at how and we all know that Elon is a very unique individual. There's obviously the clip of after Trump had mentioned going to Mars and putting the American flag on Mars, and the side by side of Elon with Barron on one side. It's like first day in crypto, Elon, and then
yeah,
you
I
know
saw that like a
veteran in
while
crypto,
ago,
like it's Barron kind of thing.
which is
Uh,
which is ironic, right? Because
yeah.
ostensibly Elon would have probably been in crypto longer than
Than
Barron.
Barrett. Yeah, which is hilarious, right? But it's Elon is a man of memes, so him being memed both for the positive and the negative is absolutely expected. And the media running with that the way it is just silly.
Right.
Obviously, that's they don't want to talk about what Trump is doing, so they'll run with that, and they'll run with the fact that he said some things that were directly squarely aimed at many of the policies that the Democratic Party has tried to represent, and they are going to twist that in whatever manner they possibly can. Now, if he had packed anything Bitcoin related or crypto related in there into those speeches, it just wouldn't be known, right? And it would be buried. So I think They're playing, and I think they knew that. I think he knows that. I think, you don't throw a crypto ball and launch a shit coin at the right after or during that particular crypto ball just to ignore the crypto industry, right? We see the moves they're making on chain. We see the moves that they're making with the very supply controlled launch of the two different coins that were launched between Trump and Melania. So, I actually want to talk a little bit about these things in the context of looking at some charts today, because I think that when we have the kind of rally into the inauguration, we then have during the inauguration and post inauguration some very sharp moves in lower term timeframes. We got to zoom out and have some context. A lot of the narrative is oh, look at everybody's draining their accounts to go over and ape into the Trump coin, and it's bad for the industry, and it's going to destroy altcoins, and everything's over, it's dead, he's killed the altcoin crypto industry, he's set us back. And I'm looking at these takes, and I'm like, wow, I guess we know that you missed that. Okay. Well, the real crux of it is like, and I've you might have even seen some of my posts on the timeline in response to people that we know and that I highly respect, by the way. I just disagree with their take on the situation.
Sure. Right.
But absolutely 100% still love them and respect them. I think they're great. So I want that to be clear if they are watching this. It's just simply a different viewpoint, and I respect their viewpoint. I just strongly disagree. And one of the main reasons why is because what did we see as soon as things calm down a bit? All the different alts start to pump again, Bitcoin start to pump again, Ethereum start to pump again. Like nothing really changed. And also it's kind of a double standard. There's plenty of projects that launch meme coins like this and utilize really heavy supply control, and no one has anything to say negatively about it. They're usually all for it. And then when, of course, Trump comes in and steps on your bags and everything's red, people get mad. So I understand the sentiment. I have a very different take. I think it's an indication of the direction that this industry is likely to go for the regulatory side of things, right? Very pro go and do your own thing, as long as you are not being malicious about it. And there's a lot of like FUD out there surrounding those coins, and they rugged it to go do this and buy coins for World Liberty Financial. No, actually those were the fees that they were collecting. They didn't rug any coins. They literally were just moving liquidity. They didn't sell anything. The fees that were made on the trading volume is what was used to buy all of these different assets for World Liberty Financial. And I'm sure that these coins will fit in over there as kind of their headliners for the platform in terms of Trump and Melania.
Wait a minute. So the $47 million worth of ETH and the $47 million worth of Wrap BTC was
from collecting fees. That's not from selling coins. Right, like they funded the liquidity pools, and then began to drop the tokens. Right, that's where they made their money. It was in the token drop and release, the token generation event, and then had well funded liquidity pools. They made an absolute boatload of money off of those liquidity pools, and then began moving liquidity around. And people get mad because, they're selling into us and this and that. But in reality, when you're funding liquidity pools and you want the longevity of your token to be a thing, that you're going to collect a lot of fees, and you're going to utilize those fees instead of selling the token down. I hope that continues, to be quite honest, which is why I think, we're probably looking at a nice little range build out for those tokens and a longer term plan.
Tokens yet.
No, look, people have such a short term. We want to, believe that the first, couple of days is going to make or break this thing. And yet, I think people have been too used to these pump and dumps and get in, get out real quick. And I'm going to 10x my coins over. That's not, I don't think that is, the opportunity was there for people to do that, on that day, and even on the secondary pump up, right, that made a lower high. but now it's building out a range on Trump. Melania is taking a little bit of a hit because it is a secondary token. I know a lot of people are pissed about that. But the thing is if you're pissed about it, you don't go into it. Like, what do you? Oh, but it pulled liquidity from this token to that token. Like, well, you said the same thing about Trump pulling liquidity from unicorn fart dust and Pepe and
Right.
Ethereum, but like these things all recovered just fine, and will continue to recover just fine while in a bull market. And I think that part of the hot takes that are going on right now are people trying to square what's going on in the markets and how things are evolving over time. We've got really big players in the markets. We've got a president of the United States who's technically put his name in the markets. He's not the one who is selling you the coins, right? He's got a company taking care of that for the business side of things that are under, the corporate banner of Trump, right? So
I'd like to say this though, because he has the capacity right now to really, really, really legitimize the ecosystem in general, the whole crypto ecosystem. And I don't know that launching meme tokens and or putting the PFP for Doge on the seal for the website for the Department of Government Efficiency. Like, I don't know that actually makes things seem legitimate.
Here's the thing, though. Trump is a meme lord. He has been for a long time. And he was an internet personality before he became president. He literally would say the most crazy shit on the timeline and go after people and brand them. He brands them with crazy names. Like, anybody that's really truly surprised by anything that Trump does in terms of branding, I think just haven't been paying attention or maybe ascribing what they want to see to Trump when Trump really hasn't changed, right? This is much of the same that we've come to expect from him. And we tend to lose that perspective when we really want something like the legitimization of the crypto industry, which I don't think people realize that he legitimized meme coins in a way that has not been legitimized before, right? Like that's one of the reasons why I think it was a meme coin. Also, he knew that he would get absolutely killer returns on the liquidity pools. Like they're running this in my opinion in a smart way from a business side of things, especially if you want to build for the longer term in this industry. Now, if you think what would the difference have been if he launched a utility token? Nothing, right? Outside of having some utility, and there's no reason why he can't wormhole or do other things with these tokens to provide utility. And I mentioned this before in a very long Spaces event on that day that it launched, about a 12-hour and 39-minute Spaces event that nearly got 31,000 people in it for total people tuning in, which is really awesome. Obviously, there was very big names on that stage that pulled in the audience. So that wasn't because it was me. I just happened to be the person who was live at the time. And in this case, one of the things that I kind of talked about on that stage was like, there was why did we launch memes in the first place? Why did memes become a thing? Because there was regulatory ambiguity regarding some of the SEC policy and enforcement, right? What they were doing is they were, one of the main practiced ways to kind of go about launching tokens and avoiding the SEC, and that wasn't a guarantee, by the way, but that was to provide no promise of returns, right? And provide no utility. And I think this was kind of a shot across the bow for that kind of like, hey, these provide at this point no promise of returns and no utility, just like every other meme coin in the sector. And to complain about this one versus any other meme coins, including the ones that we've launched ourselves, really is kind of cutting our nose off to spite our face. And it doesn't make a lot of sense, right? If he can't do it and you're mad about him doing it, then that can be applied to everyone in the industry, in my personal opinion. And of course, that's just an opinion. We want so badly to be legitimized, yet we launch shit coins constantly, and 99% of them are rugs, right? This one isn't a rug. It's very clearly holding up and at a very high valuation. And there was people who managed to get in early on the run up that took a lot of profits. They managed to bank on the fees, and then everybody wants to call foul and scream and yell and constantly post on their timelines. And these are the same people who have rugged like 100 projects in a row. It's like, really? You've got a giant account, a giant following. You've literally been farming your audience for crypto for years, and yet this is the problem? Okay, give me a break. And that's, I get it. It's Trump. He's a divisive guy, and people are going to go after him with anything he does. If it was a utility token, they would have been like, well, he's going to just exit the SEC and he's going to utilize this to enrich himself in the longer. Yeah, no shit. Right? Isn't that what we all want? What if he transitions it to a utility and then provides regulatory clarity regarding these types of crypto assets between meme and utility? That would be brilliant, right?
Right.
We don't know.
That would be so. Maybe he's legitimizing launching meme tokens, which also would be. It's better than it's still whatever he does at this point. It's already better than the atmosphere we're leaving. So it's an improvement. Yes. It's just my concern is that it's opening up
the frenzy.
It's opening up a line for the critics to take shots at him. Yeah,
but they were going to take shots no matter what he did, whether he launched a token or not.
But my father and stepmom and my uncles and aunts, it's easy to say, look, he's a scammer. He's launching meme tokens, and they don't know what any of that means. So it's just easy for them to absorb the narrative. Where if it's about actual Bitcoin or real, I want to say real projects, I don't think that's necessarily fair, but it is, we know what the difference is between
a meme and a utility.
Right.
And a store of value.
Right.
But it's still ambiguous though. So here's my contention is, let's say he did nothing and then he starts providing regulatory clarity. Do you think for 1 second that they aren't going to single out all of the horrible meme coins that have run to obscene market caps, whether it's the racist ones or just the funny ones like Fart Coin and Butthole and Unicorn Fart Dust? You think that they aren't going to run with the headlines of, look at what he's done and this stupid shit over here that he's trying to get people to invest in? They'd use anything they can to FUD, right? So like, there's no avoiding it. You might as well redirect the FUD to yourself, take control and own the narrative, and then do what you're going to do on the policy side. That's my personal opinion. I think that I don't think anyone else could have done that, because what they would do is they wouldn't talk about regulatory clarity in the context of Bitcoin. They don't want you going out and buying Bitcoin. They want to buy Bitcoin, right? They want to buy Ethereum. They want to buy Solana. They want to buy XRP, right? They don't want you to then. So now if you become the sounding board for them to scream about, and then you start providing regulatory clarity, it takes the focus off of some of the horrible, crazy shit that occurs in the industry. Now you can be the focus of it while legitimizing the rest of the industry. And for all of those that are like, well, this is just going to be serial launches and rugs. We've had serial launches and rugs for a very long time. Yeah, is it bringing more volume to a lot of those serial launches and rugs? Yeah, but nothing fundamentally changed about that. And with regulatory clarity, especially after an event like this, we're likely going to see something being done about those. I don't think that they're going to want to have crypto be a headline and then all of the serial launches and rugs be a focus, because that's been a focus for a very long time of critics, and rightfully so, right? And I think that, providing regulatory clarity that might help deter some of that from occurring, in whatever form that takes. And of course, we're just speculating, right? We're just speculating, but that's where I think that having apparently I have the counterpoint view to this entire launch, because I seem to be the only man shouting at the rooftops that this is perfectly fine and that anybody who's being a critic is being should look inward, because many of them have launched their own tokens. And sorry,
Sure.
he launched one. He's got a bigger platform, and he ate your lunch, right?
Well, sure. I mean, that's not. I'm open-minded, right? I'm not. I don't think it was terrible. I just don't know that it was necessarily the best way to do it. But I mean, I can see your points too. I don't think it is legitimizing the ecosystem. I didn't expect to see this happen like it did. When I first heard of it, I thought it was somebody else must have been capitalizing. And how did they trick everyone into believing that this was an official?
How did they hack his account? Yeah.
How did this happen?
I think that's more. I'll be honest with you, Peace. I think that's more of what people are a little upset about, is like, why didn't we know? Why wasn't it immediately legitimized right away and confirmed?
Right. Why didn't you tell me first?
Yeah. And that's really where I think a lot of people are having a serious bout of cope. And I think that this legitimizes meme coins as a real asset. I think this is going to lead to meme coin ETFs. I think some are already being proposed. I think that this is going to provide for, what Van Eck has been front running the entire time regarding the meme coin sector. And I think that there's going to be plenty of room in this space moving forward between utility coins and RWAs and stores of values and memes. And I think that is going to, we have to go through the process of onboarding traditional markets into these systems. And I know people hate that we say that, but that I say that especially because, we're supposed to be against the traditional market systems. No, we're now in control at this point.
The whole point is to integrate and combine everything. It's not going to be all one or all the other, and that's good enough. That's versus just only having the old system.
Exactly. And I think that give it a few weeks, and I think things will calm down. People will come to terms. We'll have more conversations like this throughout the crypto industry, and I think that those who once we start seeing what it is that they want to do in terms of policy and potentially following through with some of the bigger promises, free Ross, add Bitcoin as a strategic treasury reserve asset, providing that regulatory clarity, which, by the way, his SEC appointment is a very good one. And Ueda, who has been a very big critic of the prior administration and SEC policy, basically calling it a disaster. And he's all for experimental sandboxing and really letting things kind of go wild so that we learn from it and can and provide regulatory guidance, because that's what regulators are for. They're not there to just stomp on industries. It's for the purpose of what they should be. They shouldn't be there to stomp on innovation. They should be there to provide recommendations and not stifle innovation right off the bat before it can get going, because we have to learn what to do correctly regarding this. And he is a guy who is a proponent of that. That it should be a big signal to this industry that Trump plans on delivering on his promises regarding the crypto industry at large.
I'm sorry. Somebody launched a DeOrganized Media DAO on prompt to DAO, and it wasn't me.
Oh,
so
interesting.
Interesting. So I'm
going to send you all the tokens so that we can control the supply. No, I'm just kidding. Look, I think that I think maybe we should get into, because this conversation leads right into what I wanted to talk about today with you and the audience, and that is the ambiguity on the charts and some of the mixed signals that we're getting. And I want to start with Bitcoin kind of right away. And we can always come back to this conversation throughout this because I think that it's an important conversation to have. And I'm open to counterpoints as well. because through the counterpoints, I can formulate my opinions and maybe have a better argument if I still hold a different position. But I did want to talk about the position in the markets, and that's Bitcoin trading now to 106,800 or so. And what we saw was on Saturday into Sunday, we actually saw a confirmed high on a close and a swing basis come in on the Sunday closure. And one of the things that I had talked about last week in my recorded videos was like, hey, if it puts in a high here, because of the structure in terms of trend, we're coming off lower low on a close, slightly lower low, basically equal low on a close, but a lower low swing. And then no matter where we ended things, over the weekend, we were looking at this being a higher high relative to this higher high. And because we went trendless, we were in a downtrend, possible reversal set up to continuation, but we got a trend break, but then a lower low to a higher high. And you remember I had said when there's, the trend is your friend until the end of the trend. When the trend is unclear, everyone's in fear. So what is the criteria that we look for from here? Oh, wow. I'm a poet and I didn't even know it.
That was right. That was an extra rhyme.
Yeah, I had to roll with it. I had some coffee this morning. So we have now a higher high. And what do we want to see? We want to see higher low on a swing or higher low on a close. And the potential for a higher low swing and close would be set basically wherever Bitcoin is trading today and higher. So the criteria for me on a technical basis would be 104, 400 to 500 or so on a close would set this as a swing low and closing low. But because the wick from the 20th went all the way up to hit those upside targets that I've talked about above 108, I was looking at a zone between 108 and 110, taking it $2,000 at a time to 110 to 112 is the next zone. And then as volatility increases above our Bollinger Band set here, if it does do that above 110, by the way, which is where the upper third is, we'd be looking at expansion. And I'd start increasing the targets, 112 to 115, 115 to 120, 120 to 125, so on and so forth, about $5,000 at a time on a swing and or close. Doesn't really matter as long as things are closing above the upper second and breaking the resistances overhead. Now, in this case, this is where it does, get a little bit difficult, right? Because even if we set a higher low in the trend here, we have this higher high to contend with. And it's a higher volume, higher high in the lower term timeframes. So if we look at volume here, we see that this is a large, high volume candle that is setting up for a nice closing and swing higher low structure here, right? In terms of trend. In terms of support and resistance, we're above the close open of the prior all-time high at 106,000. And we need to see closes above 108,000, basically 400, to then go test that 109, 350 or so to that 110 area. If we start closing above there, we're looking at an expansive move to the upside for some of those deeper targets, 108 to 110. Like I said, $2,000 at a time till we get to 112, then $3,000 to 115, and then looking above. And that's where we can, when we're getting mixed signals on the chart and we're trying to suss out potential trend direction for the longer term, like on a daily that might lead into higher term timeframes, we have to just nail down our criteria for continuation to the upside of trend and trend forming. Because right now this is just starting to paint a trend reversal setup. To hit full trend, we need to see another higher high and another higher low, either on a swing or a close, right? That would be hitting your full trend. And typically, for my Elliott Wave friends and Gann friends out there, like you're going to maybe disagree with some of my takes on this, but that's one of the reasons why I'm more accurate than most of those systems, sorry to say. And that's not me being cocky. It's because I'm utilizing the base level that those systems build upon. And I'm not, I really want to say that that's not me being cocky or calling anybody out. That is literally me utilizing the base set of data that those systems use to formulate those particular sets of criteria for utilization and positioning, and as well as measurement and all that kind of stuff. And when you drill down to the basics, it can help you suss out the maybe a little bit of ambiguity in the GANs and the Elliott wave and whatever other system that you're using. So you start with your base and then apply your advanced analysis on it. And I did want to say, to kind of reference back to this high, one of the reasons why we're already approaching some of the areas near the highs here where we need to contend with this high next. And we can see that the volume in the lower term timeframes up here is pretty astronomical in comparison to the volume that was coming in before. It's a very high volume, high candle up there. So we see that the push up to that 109,350 will need to be contended with, but you can see Bitcoin's already gunning for it right now as we're speaking. So if it does close above there, 110 is going to be my next target. And then we have a zone of interest between 110 and 112. So we're just setting the criteria and understanding that if that higher volume high breaks, we're going to see a move likely higher, whether it's on a swing or on a close in the lower term timeframes. But what we need to see for continuation, obviously, is a close above it, right, on the daily time frame. And then we can start looking for more from there. And this is where, we're not going to dive too deep into some of the other technicals. We beat them to death after the first 4 videos where I explained how I break down price action. And one of the reasons why we are so accurate when we're using a system like this, and I say we because I've watched some of you now message me after going through those videos and saying, like, I didn't think that I could get it this accurate. And it's not, we're just following price and setting criteria for what we are looking for. We're letting price do the work. We are not making predictions. We're looking for conditions to be met for the upside and or the downside. And in this case, I did want to reference, this chart that we've been talking about for quite a while. When we had talked about this the last time, I'd mentioned, Bitcoin ran the low side liquidity here right into our red zone at the bottom side of the range and then popped right back to the top side. We saw this throughout. We had this tighter range that Bitcoin was playing in with this deviation to the upside. And that, if we flip the resistance, like this resistance over here, back into support, the condition would be that we want to see it closing above, right? We can get wicks below. We saw closes above. And then now we're seeing a push back to the top side here. And even in those lower term timeframes, we could have easily positioned off of this as well with the breakout and back in, right? So there was a nice breakdowns and then a reclaim and then a nice close open above it after dipping down. Easy trades right back to the top side. Could have held very easily. And then once you see this low actually being set, you could play it back to here, take some profits, leave the rest for some more stuff like that. And we'll start getting into trading and my advice on setting up or looking for trade setups soon. But we need to clear up some of the ambiguity that many were seeing on the charts here, like on Ethereum. So let's go and find Ethereum. I think I have this one with the charts all marked up. Maybe we could just get rid of this. So a lot of people scared for Ethereum. Oh my God, what's happening? It's all over. It's, it's not performing well. It's Solana's going to eat its lunch, especially with the Trump coin launching on Solana. Many different takes on that. Some valid, I agree with, but really in the grand scheme of things doesn't change anything. In terms of structure for me. So we'll just call this ETH and we're just going to get rid of all of this markup. We're going to look on the daily here. So with Ethereum, Ethereum in the longer term, let's go to the weekly here. Ethereum in the longer term is playing in a pretty big accumulation structure. And in fact, appears to be, somewhat of a little bit of a double shoulder head and possible shoulder here, in terms of an inverted head and shoulder for the pattern traders out there. But Ethereum still hasn't broken its all-time high up here, and we got to kind of understand the context of where things are. because it's not that ambiguous what's going on here. Is this bullish or bearish? For everyone that's super bearish on Ethereum, this was a weekly downtrend, right? We found a low on Ethereum here when looking left, right around this low side structure from the prior cycle, holding on to it on the lows, and then pumping off of that lower second standard deviation of volatility right back to the top side. So you had volatility expansion to the downside with no compression. We just got to run from one side of the bands to the other, right near the highs again. And we saw a sell off down to the basis band. And this basis band here, and in terms of trend, what did we get? Well, the last lower high over here, we got a trend break on the weekly. So we have higher highs. What do we look for? Higher lows equal lows. This is a bullish setup. So there's a lot of people that are like, it's so bearish and it's over, it's done. Well, no, this is actually a really bullish setup, because the criteria for setting a low on the weekly on a closing basis is going to come in at about 3,600 up here on the close open. Of course, we want to see the wicks being beat on a close. That would be very nice, above 3,750 to go run this higher high up here, right? So once running the higher high, we're looking right above there at the upper second standard deviation at $4,100. Hey, that has confluence with the monthly, by the way, on a close open basis. We have some criteria for that that we've seen before already. And I forget, actually, was it the close open breakdown? I think was right around there. It's actually lower, so I'm lying. I think it's maybe I was just going off the weeklies with that one. But either way, when looking at this in the context of the daily, we see that, that structure on the monthly, or I'm sorry, the weekly. And we're going to get all mixed up. See this structure on the weekly, this pattern, this downtrending pattern on the weekly. We've kind of seen this on the daily within this potential higher low structure that could be building, or potential bullish structure that could be building on the weekly. We see the same kind of thing from the initial rundown from the 4,100 area for the weekly. We're seeing that kind of play out on the daily. So what do we need to see from here? Just like on the weekly, we need to see a higher high, and we need to see a higher low. There is the potential for a higher low as it relates to this low down here in terms of a swing and potentially a close, right? So in terms of structure, what's the criteria that we need to see occur next to break to the upside? Pretty simple. All we need to see is a daily close above 3,500, and let's not make this red, but we'll make this yellow so it's a little bit easier to see. And we're going to get rid of the arrow. I'll just bring that back in a moment. But we need to see 35.27 closed above to break the downtrend here. And if it's coming off of higher low structure, that would look pretty good. Higher low, higher high structure. That is a trend reversal setup. We just need to see, higher lows, higher highs from there for a complete trend shift. And that's what is likely the setup right now. And to the downside here, we need to see the 31.25 hold on the daily. Where do we see the low being set? The low will be set on closes above. On the daily, you're probably going to see a low being set right here because of the 3 candle structure. If it closes like this today, you will see a low being set for continuation to go and test up here towards that 35.30, 35.27. I need to see closes above 34.450, right? That means we're testing up to 34.75, where the close open high is up here to that high at that 35.27. Those are the conditions that I want to see met. Of course, that would also be closes above the basis band, so in the strong half of the bands here, and that's just overhead at 33.75. So we have a very clear setup here on the daily, and this is a very clear trend reversal setup. We need to see it start by closing the swing low, which would be a swing higher low, and then confirming the actual closing higher low. From there, we just look to this higher high. That's ultimately the criteria that we need to see for closes above. This is also near a volatility level of interest by the upper first standard deviation at 35 35.35. So essentially right around this high that needs to be broken and closed above anyway. So we have a lot of confluence here. Then what do we look for? Well, where's the next big area of resistance on the daily? Well, the next big area of resistance on the daily, and honestly, there is some history over here, right? That Bitcoin is contending with right at the basis band at this high on a close. So that's all the same criteria. Just look left, we see confluence between the basis band and this high to the wick high above it, which is where these highs are coming in. So this high is being contended with right now. This low is being traded above. This low is we're trading above. This low is being traded above. So we have to look at the highs, right? And this consolidation structure. But once we get above there, we're going to get above this high. And then we got to go for this high right here, which is confluent with this lower high. So we have very clear structure. Once Ethereum gets out of the woods to the upside, gets above the volatility level of interest, and then starts to work its way up, there is a little bit of traffic in terms of historical candles right here, obviously, that are confluent with the close open high by the upper second at around 3,700 to the high up here at 3,746 or basically 3,750. That's the next big high to take out. But no matter what, if we get higher highs relative to the most recent lower high, we have a structural trend and we're looking for higher low equal low structure that will hold this low right here. So this candle structure right here from the closes to the wick. Now that removes a lot of the mixed signals that people are getting market wide. Bitcoin's in the strong half of its bands. It's pushing up towards its all-time highs again, but Ethereum's lagging behind, as it should in this type of a market environment when you have Bitcoin dominance still where it's trading at. Ethereum, as I've mentioned, just if you go throughout its history, like even just the last cycle, Bitcoin broke out November, December of 2020, made new all-time highs on a close on longer term timeframes like the monthly. Ethereum followed and alts followed in the first quarter of 2021. So we're still in the first quarter and the very beginning of 2025. So this would be our 2021. Nothing has really changed in terms of liquidity cycle in that regard. And I'm still looking for alt season to begin. Let's go ahead and take a look at Solana, because Solana has been a strong performer, right? Many people think like, oh, Solana and the Trump coin might be the ones that are kicking off alt season. I say no. The biggest player in the room is Ethereum in terms of market cap. When it is actually running to its all-time high and higher, i.e. out of this bigger structure, this accumulation structure that's happening here, trading above 4,100 and actually gunning for its all-time high and going for $5,000 and breaking, that's when you're going to see alt season actually kick off. I don't think Trump coin's going to start it. I don't think that Solana is going to start it. I don't think the XRP is going to start it. Oh, but the XRP has a chance to flip Ethereum. Great. Yeah, that's a good thing. If they can do it, it's good for them. But I think Ethereum is what is going to start the alt season. And we can go look at Solana, and that's just by virtue of how much liquidity is locked on Ethereum, by the way, and its total market cap. That's the other reason. But we can go look at Solana. Maybe I have Solana up here. No, I've got Litecoin tagged. Oh, boomer coins coming out of the woodworks. Let's go take a look at Solana. You have any questions for me?
No, I just, you know what? I just want to reiterate for people, because you mentioned like the swing low and then the closing low, and we haven't set the closing low yet because it needs to close. Make sure I understand this. We need a close above the close low for the candle that set the high for it to set the low. Or the candle that was the high, not set the high. Does that make sense?
So let me just reiterate. We're looking for conditions, right? So for Ethereum here, we're looking for essentially two real conditions to be met.
Well, we need to see over 35.27.
That's essentially for right now well, that from here that would create a higher low. And then any closes above this lower high at 35.27 would be higher high. So we'd have higher low, higher high structure, right? So we would be looking at essentially this, right? Something like this. And then what are we looking for from there? We're looking for something like that, right? We're looking for higher lows to develop, hit full trend to the upside, right? Because then you'd have higher high, higher low, higher highs, right?
We
And
can't
that's an
call
uptrend.
this where you started that pattern, right? That you just wrote on that second to last candle.
Yes.
We can't call that a higher low until we
it's
get
not
a
set yet.
close, until we get a close above the
Anywhere
low.
here or higher today. Technically, it's going to be any close above 3,300 will set this as a higher low swing and a higher low close. But I have additional criteria.
It sets the low by closing above the close of
the open of this bear candle right here at 33. The reason why is because if you let's
after the high candle.
Yes, because
the one that
if you look
high, right.
Well, what I want to show you here is if you look at this high was set on this candle right here at 32.10. The swing low appears to almost be confirmed, at least on lower term time frames. The swing low is confirmed for the lower term time frames, not the higher term time frames, because yesterday's candle did not close above the bear candle here, the open, right? It didn't close above the body of the bearish candle here at 3,300. It wicked all the way up, but it didn't close above. So it did not set any kind of a low. Today's candle is still live. So we can't say that this is a foregone conclusion because this is live price action in today's candle.
If it closed where it is now, it would set that low.
It would set not only the closing low, but also this. It would set not only the swing low, but the closing low. Yes. So that would be a 3 candle structure. There's more complex structures. That's why we have the more complex criteria for some of them. But in this case, this would be a higher low closing here or higher, right? So anywhere above 3,300 by the end of today, this will be a higher low on a closing basis. But in order to really have confidence that this low is going to be a significant higher low, and not just swing up to 3,450 here where it got rejected in the past 2 candles and then come back down and take this out, we need to see closes above these 2 highs at 3,450. Take out the close open slightly above it, 3,475 would be preferred. So, you can keep your criteria as tight or as loose as you want, depending on the time frame. But in reality, we just need to see this higher low set and then take out the higher high at 35.27. That's the criteria. Like we can add the intricacies within this candle structure here, just so that we have a better idea of what's going on in some of the lower term timeframes as closes come in. But the reality of the matter is if it puts in a low here above 3,300 in terms of candle structure on this low, it still needs to get above and close above 35.27 in order to break the downtrend. And then we would have higher low, higher high structure. That is a trend reversal. From there, we look for higher low, higher high for full trend.
So a close above 35.27 on Ether would be a trend reversal.
This would, yeah. So this part of the trend, higher low to higher high, is a trend reversal setup. Now, a lot of people will be like, no, it's an uptrend. Yeah, it is. It's technically higher lows and higher highs. So it is an uptrend. But that's a trend reversal setup. Full trend is going to be another higher low, higher high. That would be your full trend. That's a full uptrend. And there's many ways in which people explain that. From a swing structure, it would be, a trend reversal, higher low, higher high. You have an uptrend, right? And they would be using this low down here to take the swings up, right? As that's an uptrend. Right. But in terms of getting really granular with what your criteria is, it's a trend reversal setup because it could still chop around. For instance, you could have a higher low, higher high, and then say it dumps all the way down past this low. Now, what do we have again? Now we've got a trend reversal setup to a trend reversal failure, right? To a lower low. But we don't have any clear trend again then, right? That would have no clear trend. It wouldn't be an uptrend or a downtrend. It'd be trendless. It's just chop. right? Sideways. It's crab price action. There's many different ways in which people would describe it. But it would be that, like I said, when the trend is, when the trend is your friend until the end of the trend. When the trend is unclear, everyone's in fear.
In that situation, you probably shouldn't be making many moves because you can't tell what it's going to do.
Oh no, I absolutely love the trades like this because it's more likely going to form a very clear range with deviations to the upside and downside, right?
Okay.
So, and then we can define that range on the lows right here, because where did this low come in? It essentially came in right here at this big area of interest to the downside, right? We can have the criteria here. And as I draw this on the chart, I think it's going to become very clear to you the way that I would play this, right? We've got a big area of interest down here where we've previously found support. You can even have some areas of support that you could draw in here inside of this wider area between 31.36 on the close open here to that 2,900 down here. And then to the top side, we've got some pretty clear overhead resistances, right? On the daily here. So we've got some close open resistance. We've got some resistance over here. But, there's even this wick low, or this wick high of this lower high rather over here to this high side structure right here above is an area of interest. Or you could draw it however you want. If you want to use the closes, if you want to use the wicks, if you want to use just this high, it doesn't really matter. But you could use the lows up here, right? This low to this high up here is the bigger overhead resistance, especially if it were to deviate up there, right? Like you could take and say, okay, well, this low side structure to this high side structure is technically a big range up here, right? And then you can look in the candles prior and you can see where things kind of found support, where it found resistance, where it found support over here, resistance over here, support down here, yada, 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 right? And then when you look left at the top side of this, now it's above all the highs, or the lows and the highs, right? So getting above 35 or 37.50 up here, there's no real closing swings, either a high side swing or a low side swing. So realistically, the next big area of interest would be up here, right? But if it did something like this, it's just in a big range. And range plays are some of my favorite trading because I can get in position on both sides of the trade. I could potentially take a short here and a long here, and now I'm bracket trading, and whichever side breaks, you always take profits throughout this process, but whatever side breaks, like if the top side breaks, I'm just getting taken out of my short and I've got a long, right? If this side breaks, I'm closing that long and I'm in my short, right? So I can play the downside and the upside. It gives me options for range trading, or just, play the range. I'm taking a short here, I close it here and go long and then close it in here. And if it runs, great. I've been trading this whole range, so I made a bunch of money, right? And I'll just take it to the next move, right? I can play the breakouts. I'm not a breakout trader in that regard. I'm a volatility trader. So breakouts and breakdowns are typically fraught with peril for most people, especially in lower term time frames. So if I'm positioned in a range, it's actually preferable for me. I love consolidations. And we'd likely see the bands also reflect that, either pinching in or, volatility kind of creating a range here, and then, expansion above the upper second and the overhead resistance. We're looking for continuation. So the long position is obviously going to be the winner there. To the downside below the lower second, it's likely going to go down into support kind of thing. We get to set the criteria. We get to set the conditions that we're looking for. But it's all about understanding what conditions you're looking for in the first place, right? In this case, we're looking for the trend reversal setup to begin to try to play out on closes above 3,300 today for Ethereum. And that's where, a lot of people get goofed up because you got to start with the trend, right? You have to start with the trend. We have a downtrending structure. We have the potential for a higher low within this structure. And that's always the beginning of looking for a potential trend shift. Make sense?
Yes.
Cool. Is there any questions in the chat? No one's been chatting lately. There's hasn't seemed to be any questions.
No one's been chatting lately in the show. For those that are watching, please do. If you have any questions, this is a great way to get those questions answered live. So if you have any questions about the chart or the analysis, let us know. Drop your questions in the comments, please.
I think we got like over 100 people here.
We're at 166 viewers. Usually that's like our max number, so there's probably not everyone still watching, but usually like if we had 150 turnout, we averaged like 120 viewers.
Yeah, I'm looking on X. It shows us we got like 135 watching right now on X live. So
just
if you do have
just on the DeOrganized X stream, so on the Peace Love Music, there's another 20, and on Bitcoin Live, there's another 7, and there's
because it's spread across. Okay,
right.
So yeah, if you have questions about this, please, this is the time to get those questions in, because I am going to go look at Solana. Solana had a nice move, right? And this is the same thing as every chart that we've looked at, just stronger, right? This kind of reminds me of the Bitcoin chart. A little bit of a downtrend. This was more sustained, got some expansion down, ran from the bottom side of the bands to the top, put in a lower low close with a lower low wick, and then trend break, right? We had a trend break already. This downtrend had some higher lows to a trend break, lower low, trend break back to the upside. So what are we looking for from here? What we're looking for, again, is higher low, equal low structure that remains above this last low. It's really simple. Like, this is dead simple, which means that there's a massive range for volatility. And you can see that reflected in the bands too. They're starting to spread out. So even on severe downside moves where everybody's going to get scared as hell, unless it takes out this low, it's fine. We're looking for structure to build. And in fact, even locally to the top side here, we could, wrong thing. We don't want a measurement there. We want to just draw the box on the bottom there. We have our high confluent with our lows coming in over here for this area of interest to the downside as well, right? And yes, we can pick out areas of interest in this range as well, like we did with the Ethereum. But really simply, what we have now is the potential for even to possibly try to set a higher low up here on a swing and close. What is the criteria going to be? For this area up here, we need to see this low hold at 229. Excuse me. Where we need to see closes come in above to set this low on a close and a swing. We need to see it come in above this upper second standard deviation that it's trying to push up against right now. But it's still not out of the woods. Just like Bitcoin, it's got a big high to take care of up here and take out to the upside. Had a nice volatile move up there. So let me go ahead and get my arrows back here. So we've got a lower low and on a close and a swing, right? We need to see now higher low structure begin for a trend reversal. And you might be thinking, well, this is obviously going to move. No, we still need to see structure build. So need to see it close above 229 to have a chance to make this a higher low swing at minimum. It's still going to be a higher low swing even if it closes here. But for a higher low close, you want to see it coming in above our 260. 199, so 262. That would solidify this higher low swing and a higher low close targeting this high up here, right? And we are in by the way, we are in the higher high territory for the all-time high, the prior cycle high at 260, right? That's what Solana is pushing for. It's basically attempting to solidify some closes. It did get a closing higher high, so it has a closing all-time high as a higher high, and it has a higher high up to 295. On closes above 262 here, we need to see continuation above 295 to 300 or so, starting to get into blue sky territory, right? And that's where you can see the expansion. We're meeting the criteria of closing above the upper first. So we're going to continue to see Bollinger Band expansion and price volatility expansion to the upside. If we see closes above the upper second, that would be volatility expansion to the higher high swing up here. And that's where green light is go. And it's either going to hit deeper targets on a swing or a wick, or closes above. We're looking for continuation to further upside areas of interest. And this would be our green means go, baby, go. So we've got our stoplights on the highs here. If this were to fall below, we've got a high side structure we'd like to see hit. There's kind of a zone of interest between this structure over here and this structure right here to this basis band. We want to see this being closed above, and that's right around where this low is coming in at 213. So we have an area of interest kind of in between as well, right? So we've got, you know, this high. We'll even take these highs over here. It's a little bit more aggressive, but you know, it's kind of a zone that we get to define, right? And then we've got this closing low by the basis band that we don't want to see closed below. Could it still save itself? Absolutely. Could it still go for higher low structure? Absolutely. The danger is any kind of lower highs to lower lows on a swing. That would not look great, but from this position right now, it's fine. But we could create tight criteria in here if we wanted. I mean, hell, we get to do whatever we want. We're the one making the chart here. We could even take these lows down here, right, and make a wider middle zone here as it relates to this high side. But we want to see it remaining for bullish posture, and higher low structure would be preferable to be above the basis band and staying in the strong half of the bands. For continuation in terms of volatility, we want to see and I do mean volatility continuation, volatility expansion. We want to see closes above the upper first to maintain that at that 236 for the moment. We want to see, of course, like I said, close the higher low and swing low and get that continuation to the higher high up there where the current all-time high is coming in. And now we can take this this bearish downtrend, right? This downtrend into support here, specifically this last high, and we can pull a fib on this, and we can get some areas of interest to the upside because it is blue skies. You know, it is up against prior historical resistance, but we have some confluence for our areas of interest here on retracements as well. So if we look here from the high at this prior bear, this higher high to the lower lows down here, we have the pull coming in at 264.63 to the low here at 169.22. Nice. We got some meme numbers in there. We've got a 618 right here at our mid zone that we identified. We could even take and identify areas right along with it. I would just keep it as is to the 50% Fibonacci, which is coming in right at the basis band, meaning that if price were to fall here, it's a 50% retrace from this guy here. So it's half. The 618 is preferred as a zone to test. Doesn't mean it needs to test it. Often they do get tested, but we're looking for extensions above the prior high. We've already essentially seen a front run of the 1272 there, and above there we'd be looking for the local structure here, the 1414 at 318 to 320. I would give it some slush. And then above there, we're looking at 350 at the 1618. That's a pretty major fib extension level from this drawdown, this bearish drawdown. Other people, by the way, Gann and Elliott Wave people are going to have very different criteria, and they're probably just absolutely shaking their heads and hate what I'm doing right now. But this works. It's worked very, very well. Helped me pick the top of many cycles and the bottom of many cycles. And of course, I don't call tops and bottoms until there's clear criteria to be met to create a top or a bottom. These are just going to be areas of interest in terms of breakouts to the upside. that we will have to find confluence with on weekly time frames, monthly time frames, and so on and so forth when it comes to our volatility levels of interest. Those are the two keys that I like to use. And then we can always check with momentum later on. But you can see how there is some ambiguity here on the high, because the high is so high up here at 295 relative to the criteria that needs to be met to go for continuation. People are getting nervous. They're like, oh, obviously this was a swing high here and it's going to come back down and it's going to break the lows. And they're making a lot of theories that, you know, there's no conditions to be met for it at this particular moment. There is the possibility that, you know, 262 on closes below there, this curls down and we get momentum shifting, but we don't have a clear trend. Even if a high is put in here on a close, which by the way, the high is not yet in on a closing basis. It is on a swing basis. The any closes back below 237 would paint this as a closing high and swing higher high. So you can actually have a zone that you want to see price closing above, and it's essentially the upper first right there for this daily setup right now. And you can have this as the red zone. This is where the high would be painted on any closes below this area, and dropping the low is where we see these areas of interest to the downside come into play. And, you know, we can just clearly identify those areas. And now we have all the criteria we need. And we can, if we're trading this, we can then go into those lower term timeframes, evaluate trend, evaluate support and resistance as it relates to the higher term timeframes, like this daily that we're drawing on. We can look at volatility and we can look at momentum and make a much better informed decision about where to place our trades and if we even want to trade it, right?
So we actually have a question that was like 7 minutes ago. Mr. AM asked, when you say trade volatility, you mean you are looking to have a high dollar in the liquidity of the pair? Question mark. I don't think that's.
No, trading volatility is trading compression to expansion of price action, or expansion to mean reversion of price action. So a high volatility environment means that we have larger percentage of returns to the upside, or larger percentage of returns to the downside, right? Or both, right? In this case, we had volatility expansion to the upside here, really kick off on closes above the upper first here. We got the continue of that volatility of price volatility increasing to the upside on Saturday into Sunday, right? So we're in a high volatility environment. So when I say I'm trading the higher volatility, I'm trading those big moves, right? And in lower term timeframes, you know, it was very clear when this was going to begin kicking off, right? We had very low volatility, initial expansion down, did not break below, or found support essentially in some of the areas on the daily, right? In this zone here, we did close right inside of this wick low here. So we held this area and bounced right back to the top side and kicked off high volatility to the upside. So volatility expansion is what I like to trade. And then the mean reversion. So very, very volatile up. Once we saw a high come in, I traded the mean reversion back down. Me personally, in terms of trading the volatility. And we can see that here on the 4 hour, it's coming in for a compression. And you look at where we were talking about that stuff on the daily below the lower second here, that'd be volatility. You can see how we're going from expansion to compression again. The bands are starting to squeeze in on price. If we got closes from here below the lower second, I'm looking at the next area down here, right? Pretty confluent with the lower third and where our zone of interest is between 213 and 225. Can it swing down below? Sure. Starts closing below there. Then we get volatility expansion continuing with an important area in the daily getting closed below. So we're looking for continuation down. To the top side, if we start getting closes back above the upper second here at 260, we're getting volatility expansion back to the highs at 295 anywhere above there, we're getting continued expansion of volatility by that upper third and the high here for new highs, right? We're getting that, we're meeting the criteria of volatility expansion into the highs. So we're getting increasing, you'd say, like, you could look at it as the candles are getting very large to the upside and they're moving very quickly. Because when you're talking about volatility expansion, you're talking about the dispersion of returns. You're talking about percentage of returns for a range, right? Getting very low percentage of returns in this consolidation here before getting higher percentage of returns to the downside to higher percentage returns to the upside. So you're looking at the dispersion of returns or the difference between the two. If it's closing in together and the difference between the two is smaller, then it's a compression or low volatility environment. If it's higher volatility or expansion. And in this case, we're trading, I was trading the volatility compression. I did get into a short into support and quickly flipped that into a long on Solana. And I actually longed it spot. And then once we started to see the actual expansion, I took an actual leverage long into these highs over here, took some profits, continued to take profits in some of these areas over here. And then I think I was closed out somewhere in between here when it was above this high over here. So essentially above like 260 or so, I was very heavily taking profits on my leverage trade, but I was in spot too. So I was okay with taking a good portion of my play off the table there. Before we started streaming here today, I was in around this area here. As you know, we just identified that area as an area that we wanted to see hold up, which is around yesterday's low. I didn't take yesterday's low as a trade on the long side. I left a little moon bag on the table for that potential trade with a tight stop below yesterday's low. It did not hit that, so I added to that position. And, just to see what happens, right? My stop is still in the same spot. I automatically had a take profit at a 1 is to 1.5 on the 5-minute time frame. So I've already hit that. So even if it takes my position out to the downside, I've got a win on my hands, right? Now we're getting into trading and kind of my trading methodology when talking about that. But in reality, it kind of, I traded the mean reversion down. I'm trading the bounce back up into a possible range, right? Because we are seeing the compression here on the 4-hour. So this tells me that we are, still fairly, this is a very volatile move up, volatile move back down. And what we're looking for from here is the potential for, this to form a compression. And then if it breaks out above the upper second, we're looking for the highs. If it breaks down below the lower second, we're looking for some support areas down below. And obviously there's areas of interest even below there that we could identify as potentials. And it's all condition based.
I just want to shout out, we have the QR code at the top right. That'll take people to the Landy bands. They can also see that in your profile on X, the link to that to your profile on X, and that'll give them this.
Oh, the Bollinger Band set, yeah.
Expanded Bollinger Band with the third level of third
standard deviations. Yep.
And all of that. So that's available to you guys. It's also a free indicator, correct?
Yes. You just need to add it to your favorites. It's not publicly searchable because there's some overhauling that I've been back testing for a while that I will update the indicator with, but I want to make sure it's solid and doesn't break anything before I put it out there publicly.
So you have to use the link to get to it, and then you have to add it to your favorites to find it again.
Yes, 100%. And there's plenty of other stuff in here. There's moving averages built into this. There's the volatility metrics down here, but there's a whole set of moving averages. I wouldn't change the Bollinger Bands, but you can change anything about this indicator. Then there's moving averages. You can switch them between SMA and EMA. You can turn them off individually. You can have labels, so it tells you which one it is on the chart. If you forgot which color your 9 EMA was, for instance, You can have it label it, or you can turn that off. You can use it global settings on and off for labels. You can turn all the moving averages on with labels on. This is a global setting, so even if it's set over here on the labels, it won't show the labels. We can go ahead and turn this off. So like, let's turn off the Bollinger Bands, for instance. You'll see this change. So now nothing is on. You can turn on the moving averages. You'll see that I just have the 21 and 20 right now because Mr. Into the Cryptoverse, I have some misgivings with the way that he uses these things. And I was using this as an example. Yep. I strongly disagree with the way that he reads charts. And I think that he got a lot of people out of position when the low was in for the bear market.
He kind of fucked me last cycle, so I haven't really been paying attention.
Yeah, I do not like the way that he uses them. It shows me, in my personal opinion, and this is not a shout out or a shot that I am taking because I don't like him, but I think that he's an amateur, and I think that he's making amateur calls. And when it comes to technical analysis, I think that his thesis is okay, but needs to have clear invalidations that he was not putting out there. That would be my criticism of him. I think he's a good person. I hope that he does well, and I hope he continues to build his audience, but guide them in a direction where understanding conditions that need to be met are very key, so that you don't get faked out. But I was showing someone that, his thesis on that particular thing is not great. He's right some of the time, but the nuance is missing. If you wanted like moving averages, you see the labels are checked for these two, but they're off. Globally, you can turn them on now, and you'll see the moving averages for all these others will turn on with it. You can turn them off individually, so I only get the 2. And then I've got the 9 and 21. I can change this to an SMA. I can change it to a different period. We can like use a 5 period, and we'll see that update, right? So now the 5 period SMA under the 21, and it's labeled there for you. We could turn this into an EMA, and you'll see it change as well. So you can adjust anything about this. There's even BBWP settings. I'll advise people not to change those. Super trend is also down here. For super trend, you do need to turn it on in the styles tab. That will be moving, but it's got a midline, uptrend, your downtrend for super trend stuff. And then you can make an absolute god awful mess of your chart. You can just turn it all on and do whatever you want. There's some out of box settings. You don't have to use it.
I turn everything on, and then I'm like, how do people read this?
Well, the funny part is like sometimes I'll just turn on the moving averages, so I know where the moving averages are, just the labels, just so I can check them relative to the bands. Because you see me using the bands because that's all I use. I don't need to know where the 5 and 9 and all these other things are. Those are just confluences that I will sometimes take a look at. The Bollinger Bands are what I use for measuring volatility. It has a basis band, and that basis band is the 20 simple as it is anyway. So we can see where like super trend is, for instance, relative to our bands, right? So we can use that. I don't use super trend. These were requests from people to have. So a lot of people with free accounts or some of the lower tier accounts can only have limited indicators. So I just decided to throw in the indicators that people wanted. They wanted moving averages, but they also wanted the bands. They wanted volatility metrics, and they couldn't put it on the pane up top. So I put a box down bottom, right? So it's all in one indicator. So you don't have to have these higher tiered plans on TradingView. You can have the lower tier plans, and you've got one indicator that's got a bunch of things built into it. So you don't have to keep loading up on tons of indicators, although people will do that anyway. So I hope that answers the question and kind of shows off what these can do and how they can be used. And there's plenty of indicators that are like this one. It's just that this is the one that I like to use because I made it.
Yeah, no, I think it's actually a great tool. That's why I wanted to shout it out.
I appreciate that. So do we have any other questions from the audience here? I think we've still got quite a crowd.
no other questions unless they're asking them in the wrong place. Oh, here he is. Actually, hold on. Been listening to Landy for a couple of days, and his explanations blow. So same guy, Mr. AM.
Okay.
Your explanations blow his mind. He's really digging the stuff.
Awesome. Well, I'm glad to hear that you're finding value in it. That's what I'm here to provide. And I'll tell you why. Because there's a lot of TA people who are going to show off their TA and don't tell you how it works. There's a lot of people that will show. It's usually the same people that only ever show gains in their P&Ls on their profiles. Something that you're never going to get from me is I'm never going to tout P&Ls or how much I made on a trade. You're never going to see those little P&L cards. They can be faked easily. Paper trading accounts, taking $1 and leveraging it up and then showing the percentage when you're finally in a win, that kind of stuff. There's a lot of that kind of crap that happens, unfortunately, in this space. So, you're going to get just what my thoughts are on the of the price action, and you're not going to hear me go super bullish or super bearish. I'm just going to tell you the facts about price. I'm going to tell you the conditions need to be met. What's that?
Andrew Rocket wants to know if we get to look at the stacks chart today.
Sure. We can look at stacks real quick here. Let's take a look. Where is stacks at? I accidentally reorganized this. I had these all categorized out, and unfortunately, we're going to go with this chart here, which is the Coinbase chart. All right, let's go ahead and hide all of the different drawings and start from a base, because that's where most people in the audience are likely going to start from. And in this case, we'll go ahead and I'm just going to label this STX because I don't know what else to call it. This is my current zones that I was using to reference. And we could just kind of recreate that. Uh-oh. Oh, crap. There's all kinds of stuff down here. Let's go ahead and take a look. Let's move. Okay. Let's get rid of all that. Let's go to the daily. And this is a downtrending structure. Very, very easy to identify. Uptrend to downtrend. And it's trying to form a low based off this swing low right here. We did get some expansion down, rejection at the upper side of the bands, lower lows, lower high, lower low. Pretty easy criteria on the daily. The setup is really, really simple. Drop this low and the lower second, we're going down. Where do we need to see a low set, which would set this as a lower low, and a slightly higher low on a swing? So essentially equal low swings, but a lower low close. I need to see closes back above $1.57 to set this low. And in fact, I'm going to raise that criteria. I'll raise you the actual high of that bear candle at $1.60, because that would put things back above the basis band or in the strong half of the bands. And then we need to see the lower high taken out at $1.73. That would be your trend reversal setup. What we need to see from there is the next high taken out, obviously, which is right around where the low side structure is. There's a lot of traffic in terms of candles and closures in here. So there's a lot of resistance in this overhead area. But what we need to see is a trend reversal setup. And essentially, what we're looking for stacks is to close this as a low, make a higher high, come back down. This is just an example. This is not going to play out like this. This is just, well, maybe it does. Who knows? Sometimes LARP lines do play out, and they are called LARP lines because you're LARPing. You don't know what's going to happen. Now, I will tell you, a closing low will be set anywhere here or higher today for stacks. And it will solidify that swing low. But I need to see the additional criteria of closing above the bear candle from here at that $1.60. Take out that lower high at $1.73 on a closing basis. Then form higher low, equal low structure. And it doesn't have to occur like this. It could get a higher high and then come all the way back down. Higher low equal low is what I said, right? So it could even do something like that and knock around. As long as it gets then continuation above the next high, we have a trend, right? That's where we would get our uptrend forming. So higher low on a swing, lower low on a close. We need to see a trend break, the higher low equal low structure, and then higher highs to reverse the trend on the daily. And that would look really good, right? When looking at the weekly, the weekly is where we have it's in a position where we have a deviation high, and we have a lower low swing and close on the weekly. So we've got a decent base off of this low over here for stacks. So this is the very important low on the weekly time frame, is actually right here on a close open basis. We're going to go ahead and change this. This is kind of our red zone. And technically, you could take it down to this wick low, but where are most of the candles in this zone? They're going to be right around where this low is encompassing these areas of interest, because it was bought up through this area. And we can see that we've got this area as an area of interest. And then we can put a red line down here of like, it's, yo, bros, guys and gals, not good below $1.05, right? We've got our criteria on the daily already on the chart here, but what's it going to be for the weekly? Set a low essentially above the close open candles at $1.76, right around where this high is on the daily at $1.73. So you could just keep that criteria, but we're using the daily criteria right now for that candle structure. For the weekly criteria, it would be a little bit higher, but essentially what we need to see is a close above this area here at $1.87. So let's go ahead and we'll just go yellow with that one. And then we have this higher high to contend with. So on the weekly, we need to see a low set. We can see where the bands are in terms of areas of interest, above $2, essentially above this high right here. This is going to be a big one because this was a range. This is a range, I should say. Where the bottom side of this range right here on the weekly is the area that needs to be regained to set a low. And then we need to see a breakout above the $2.07 region, right? Then we can take a look at the upper first is right there. We need to see it closing above there to give it a volatility level of interest between the upper first and upper second. And hey, look at, there is a nice swing high there right at the upper second at 250. So above 207, we're looking for low $2 region to get played. Want to see closes above around 217 to 220 to go run 250. That is an area of interest for this high over here. Anywhere above there, and we're running this higher high in terms of price on closes, right? So we've got that area up there to the actual higher high up here as our criteria on the longer term time frames. Big zone, big area of interest that you can see very clearly Bitcoin stacks could play in. So now we've got three big zones. This could be your red zone, your yellow zone, your green zone. Above the green zone, guess what? We're going for the highs up here, right? And we're at least going to be testing up to these highs up here, right? So now we have criteria for areas of interest. Very simply put, I think Stacks has found its base of support. If it fails, that's a big problem. If it starts to play around in here and then dig itself out, that's all opportunity that I would, me personally, I'm currently not fading. That means that me personally, I'm a buyer in these areas, and I have been buying in these areas for a while. Anywhere around the low $1.50 and under area, I am a bidder. So, and I will sell some at some of these levels up here because I am a trader, right? So I'm not just buying and holding forever, moon bag time. We're going to go to Valhalla. No, I'm trading this actively. And typically I'll trade it on leveraged exchanges. So, I'm trading the USDT pairs or the USDC pairs. Whether that leveraged exchange is as a centralized exchange, which for Stacks it is, because there is no leveraged dexes for me to trade stacks on at this current time.
Soon, though, from what I'm hearing, if what Peter at Velar is being told.
Oh, if it's going to be stacks, that'd be great. That'd be a great place to play the price action.
It as of yesterday, Pete said that stacks core entities are telling him end of this month, early February is when they'll have consistent 20-second and under fast blocks.
Awesome.
And they're already ready to launch as soon as that's a thing.
I mean, all of my transactions on the network have been going through very, very quickly. So yeah, they've been under like 5 seconds. I've had almost instant transactions lately, which is really cool.
Right. Yeah, everything, almost everything.
Feels like kind of like trading on Solana, where it's nearly instant, or you don't even know. It's by the time you get the confirmation down below, I'm looking at it and I've already got the stuff in my wallet.
It'll take longer to load the transactions in your wallet than the transaction itself.
Yep. So this has been, I think that people are fading stacks. When you start looking around, there's cracks forming in these other quote unquote L2s because there's no real rewards coming, right? There's real rewards coming on stacks, especially if you have SBTC, right? There's real stacking rewards in getting Bitcoin, right? So there's the reality of realizing value on this chain versus many of the others. Maybe the outlier would be CoreDAO, but it doesn't even remotely operate the same way, right? Because utilizing CoreDAO, it's the miners getting the benefit, not you using the network getting the benefit, right? You're using the core token in most cases, or some other bridged type of an asset or another layer through a D app on there. So it's just powering the network at the end of the day. And Stacks is in a very good position, in my personal opinion. I'm very involved in these other networks as well. I don't talk about it, which is one of the reasons why you only hear me talking about Stacks, because there's real things going on here. There's real ways to do borrowing and lending. Those are expanding. There's real ways to earn on the platform, whether that's stacking, whether that's mining, and the ability to really have some realized returns that you're not getting in these other networks. I'm accumulating a hell of a lot of points though. I've got points falling out of my freaking ears right now.
Honestly,
various networks.
I love the projects in our ecosystem and the people behind them. Not a big fan of the points.
Well, I mean, I'm okay with points and stacks because versus other networks, because other networks are not providing me any value right now. Right? There's things I can do, great, but in terms of stacks, we've already seen the concept prove out where we are getting real returns on things, right? So if it starts out as a point system that turns into real returns, I'm more confident in that being on stacks than other networks at this particular time. That might change over time.
Sure. I don't distrust the players. It's just hard. You don't know what it's actually worth or what it's.
Yeah. How many points is this going to equal, and what kind of a return is that going to turn into? Kind of a thing.
Allegedly, we assume it'll be a token, but what value will that token have, and how many of them am I going to get for the points? Like, is it 1 token per point? Is it 100 tokens? 100 points per token? That kind of thing. So it makes it really hard to. It just makes it hard to get excited about what you're earning on that end.
Yeah. Well, I'm going to give an example. There's somebody prominent in a different ecosystem that was taking shots at the Trump token and team for the launch, right? And this person, fairly prominent in the industry, is building a platform where literally all you're doing is receiving points. And I'm like, well, there's a lot of people invested in your platform, and you're holding a lot of our liquidity, and we're getting nothing in return except number go up on a leaderboard, and there's nothing going on. So maybe don't throw stones when you live in a glass house.
Right.
Because if people here are dissatisfied, they will unstake from your entire network, and now you don't have a product anymore. You have no network anymore. So that's where, I do encourage people to be very, very careful and thoughtful. I am not against points. I've seen plenty of point systems turn into amazing realized gains. And Stacks has real value that you can earn via SBTC, via Zest, stacking DAO. For the players that I know of that have active programs where you're getting rewards, and the Stacks network itself, and in terms of just the way it works via stacking, right, and earning BTC, or if you're a miner bidding and getting stacks, like, it has real returns that are being generated, not something that is pie in the sky coming soon, right? So this is not something that we're seeing in other networks, unless you're a miner. If you have a Bitcoin miner and you're throwing hash rate to CoreDAO, or you have an op return, you're not really throwing hash rate, you're reusing hash rate, or you're merge mining for other networks. In CoreDAO, even then, I get the core token and then I sell it off, right? Because that's my reward for securing that network, right? So, or I utilize it in the ecosystems to participate in various stuff, right? So, much like I do with Stacks, right? I use it in the ecosystem to participate in all of the different platforms, right? So that's where, conversations around these kinds of systems, when projects are trying to fund up, I totally understand. They got to lock up the liquidity. They got to show it to get the returns and generate revenue for themselves and the people that are providing that liquidity. But those people that are participating in those, maybe don't be so loud and criticizing others when you yourself have not yet provided the value, and many others are wholly invested in major freaking ways. And if that person were to be watching this, which I highly doubt they are, I would say, like, hey, I would advise you to maybe just, chill out and maybe learn something. Launch a meme coin. Hold 80% of the supply. have vesting schedules that make sense, right? Like, and for those also that were kind of complaining about it, look at the Magic Eden launch, right? Look at they're doing supply controls, and they're doing the drip out, and they're doing staking and like all kinds of stuff, right? It's essentially a meme coin. It has no utility. You're literally staking for more of the meme coin. But could it have utility later on their platforms? Maybe. That's what we're hoping for and speculating on. Same thing for the Trump stuff and many others.
I took my Magic Eden token and I bought Solana with it right away.
I was trading Magic Eden when it was on Gate.io well before it dropped. And I had a lot of Magic Eden tokens. So I staked those and I sold the tokens that were dropped to me. Or no, I sold those ones because they were already in the marketplace when it spiked. And I kept and staked the ones that were dropped, or that I claimed. Sorry, it was the other way around. But that's what all of these ecosystems are. Think about, Dave. Dave has ATC with Cool and NatNat, right? Cool is the network participation king of all kings. Like, that dude goes into every network and he does all the tasks and earns all the points, and he freaking kills it. So point systems do generate value. It's just, how does that particular project handle it? And the hope is that they handle it well, right? And then there is some sort of reward for those who are getting those. In terms of DeFi products and platforms, Stacks has them. They have two main ones that many people can point right to, and that's Stacking DAO and Zest. Those are the big ones, in my opinion. And then outside of that, then you're looking towards the DEXs, where you can also earn, right? You can provide LP and you can farm. And that's, project to project, right? For the meme coins. But that's all of this stuff is available in the ecosystem, and many of these other ecosystems, they don't have it. So I'm a bidder at under $1.50 all day freaking long. And if you're really bearish about this stuff for stacks, stay a bear. And while you're being bearish, I'm going to trade, I'm going to win, and I'm going to accumulate, and I'm going to stack more stacks, and I'm going to get more Bitcoin for stacking my stacks. Simple as that.
When you stack your STX, you earn yield in Bitcoin. What is better than that?
Exactly.
Is there actually a better paradigm in crypto right now?
No. And then you throw SBTC in there.
SBTC and then leveraging those yields on more yields with stuff like stacking down and Zest and Hermetica and the
value loops on value loops on value
Bitcoin.
loops. Yep.
Yeah.
And then the prospect of a perp dex in the ecosystem from Valar, that's big. That's very big. I don't think I can. There's no way to overstate how big that is, because that's volume. You start attracting players to this ecosystem to do that and participate in that way. That's volume in the ecosystem. That's more stacks flowing on the network. It's more SBTC flowing on the network, maybe USDH flowing on the network, and then things likely we likely see some players coming into the ecosystem that want to take advantage of that, and possibly, when whales in stacks ecosystem are very different than the whales in the Bitcoin ecosystem. Yes, there's some Bitcoin whales in the stacks ecosystem, but even at that, when actual whales start coming over and whaling, whether that's trading runes and having liquidity pools, or going and leverage trading, or bringing some of their liquidity to SBTC and then going to wherever they want to go to, Zest to get a loan, or going to stacking DAO to participate in that ecosystem, or providing liquidity in different places. That's where things really start to get rolling for the ecosystem. That's where I think we have a lot of potential in stacks, and I think that I've never not been confident in the network and the way it was built and the way that proof of stake works. The only thing that I was not confident about, and maybe I'm changing my mind regarding that, we'll see, things remain to be seen, is that in ecosystem support was less than what we're seeing on other networks to this point, but it does appear as though that is changing, right? And that's what we're looking for. Just some support in ecosystem for the builders, because that's how you get more people come use the network, and everyone benefits in that case.
Right on, man. This has been awesome stuff as usual, Landy. Thank you so much. Actually, earlier when you were talking about how you, you don't only show your wins, and you don't, you're the reason why
I don't show anything. I don't show wins or losses, because there's no point.
Right. Well, but that's also because you're not shilling anything. You're here to educate. You're here to teach us. You're giving me some information that I can use to help me better myself and our audience, and that's super appreciated. Appreciated. I am appreciative of that very much. I think you provide a tremendous amount of value to the ecosystem. We're very lucky to have you. I have to wrap because I got to go pick up my daughter, because she is a science Olympian, and she's at Science Olympiad after school, learning about something. I forget what she's building, and something about something.
In class splitting atoms.
Yeah, I don't think it's that advanced, but something fun after school and social, and actually learning some science at the same time. So, hey, what's better than that? But I do got to wrap it up. Thank you so much. As always, we'll see you again next week. What do you got coming up the next couple of days? Anything going on in the ecosystem?
Not in the ecosystem, but I'll have something coming in ecosystem, I think, fairly soon. It's more of a, look out for my videos that I upload and pin to my X profile Monday, Wednesday, and Friday. If you're watching them on YouTube, I'm sorry. I've been a little lacking in getting the uploads because I've been busy. But I will re-upload like Monday's video today, and then I should hopefully upload that to YouTube Wednesday when I put up my video. Otherwise, you can find me wherever Dave is. I chase him around like a lost puppy, and probably on his stage in various events. And then you quite frequently lately, I have been on David Gockstein's morning show for his stage. He runs a really good morning show over there. And of course, ATC with Dave, Cool, and Nat. I'm a guest speaker there quite often. And the Reset over there on Sundays, I like to show up to as well. And then in the evenings, if you really do have a degenerate streak, you can probably find me on stage co-hosting with Nobu over there at the it's not the night show anymore. It's called Pump Radio now. He's kind of rebranded things a little bit.
Pump Radio, that's definitely a DJ in space.
Oh yeah. Oh god, it gets if you want everything from alpha to people coming up on stage and possibly crashing out, that's the place to go. He's been very kind. They've been very kind in hosting me in those spaces and allowing me to get my message out there regarding this kind of stuff. So I appreciate them, all of them, Dave, Nobu, David Gox, and plenty of others who have had me on, including yourself. And Peace, it cannot be understated. You are a pillar in this community. We love you, and I love coming on this show every Tuesday.
Well, we'll have to keep doing it then, man. Thank you so much. I appreciate the kind words. We are DeOrganized Media, coming at you live on Bitcoin Live Decentralized Broadcasting every Tuesday with Landy. Follow Crypto Landy. Download the Landy bands in the corner up over there. And or the link is actually in Landy's X handle as well. So check them out. It's at Crypto Landy, right? There's nothing else in there. It's just at Crypto Landy.
Yep.
Right on. Landy, thank you so much, man. Brother, I'll see you around the spaces. Y'all have a blessed day. Peace out. Thank you guys for tuning in. And next time, ask more questions. Landy needs that interruption to get through the show. Or maybe I do. I don't know. But we want more questions. So next time, tune in, ask lots of questions about TA. And, that's how you actually do your own research and all of that stuff, not financial advice. Take care. You guys have a blessed day. Thank you. Peace out. Thank you, Landy.